Okay, for this video, I wanted to talk with you about per se corporations from a U.S. federal tax perspective. So when do these types of discussion points arise? So when we talk about per se corporations, we're talking about foreign entities, so entities that are formed outside the U.S., and we're speaking about them in the context of, are we able to make an entity classification election for that entity? So why is this relevant? Well, foreign corporations and a lot of U.S. corporations are by default taxed a certain way once you set them up. If the entity is what's considered an eligible entity, it can change that default classification to something else, right, within certain types of limitations. So if we start with the tax code here, on what we mean when we say corporation. So 7701A3 is where we have our starting point, right? So a corporation is a association, so that's a legal entity that's set up that where the members have limited liability, joint stock companies, and then insurance companies. Now, when we shift to the foreign context, when we get a little deeper into the details here, right? So in 7701 3B2IB says that foreign entities that don't file elections are going to be classified as an association, so that's a corporation, if all members have limited liability. Okay, so if we have a foreign entity that is set up and the foreign entity, all the shareholders, right, have limited liability, it's going to be by default treated as a corporate entity for federal tax purposes. So this includes foreign corporations set up in any kind of country around the world, but it also includes LLCs, right? So just for context here, when we think about U.S. LLCs are limited liability companies, but when we form an LLC, it's not by default treated as a corporation, right? It's pass-through. If it's a single LLC owner, it's a disregarded entity. If it's an LLC with multiple owners, it's treated as a partnership. We can file an election to make it an S Corp. We can file an election to make it a C Corp. But by default, limited liability companies in the U.S., even though all the owners have limited liability, it's not treated as a corporation for federal tax purposes. The same is not true for foreign entities, right? So foreign LLCs can be by default treated as a corporate entity for federal tax purposes. Okay, so let's talk about the election now and why the per se thing matters. So foreign entities that are eligible, so foreign eligible entities can change their default tax classification to something else. So for example, Cayman Islands, certainly one of the most popular offshore jurisdictions in the world. If you set up a Cayman Islands limited company, it's by default going to be a foreign corporation. And that's because it's an association under the tax rules. All of the shareholders in that company are going to have limited liability. So it's by default a corporation. However, Cayman limited companies also meet the qualification to be a foreign eligible entity, meaning we can file an election to change how that entity is going to be taxed for federal tax purposes. So I can file an election via 8832 to make that Cayman entity either a partnership, if it has two or more shareholders, or if it's got one owner, I can make an election and treat it as a disregarded entity. So now it's a foreign disregarded entity and it's not a foreign corporation. Okay, so let's look at a fact pattern. But first, let's talk about the per se rules again. So why are the per se rules relevant? Well, there are certain foreign entities that are going to be considered per se corporations, meaning the IRS, the federal government, does not want you, and nor are they going to allow you to change its tax classification. So these are entities that are by default treated as a foreign corporation, and they are not a foreign eligible entity, meaning that you have to leave it as a corporate entity. For tax purposes, you cannot change it. And so the list of these entities can be found in the Form 8832 instructions. So if you scroll down a few pages in the instructions, you'll see a list by country and the type of entity that must be a per se corporation. You cannot change it. So, and then the list is also found in the Treasury Regs. So Treasury Regs section 1301, 7701-2, B8I has a full list, again, of all those per se companies. Now, let's talk about a fact pattern here to try to illustrate why this even matters. So let's talk about a private equity group. Obviously, this is a fake private equity group. They're going to set up a foreign entity to invest in some businesses in Europe and elsewhere throughout the world, let's say. Now, the investor base, where they're pooling their money from, it's going to be a mix of U.S. investors and non-U.S. investors. And the U.S. investors complicate things a lot because having U.S. investors in foreign entities means you could have issues with PFICs, passive foreign investment companies. You could have issues with CFCs, all these types of issues that generally you try to avoid because there's a lot of complicated reporting around it, and sometimes the tax impact isn't favorable if you have an entity left as a CFC or a PFIC, particularly if it's an investment vehicle. So what commonly happens here is these private equity groups want to make the entity transparent. They want to make it pass through for tax purposes. And this helps avoid the PFIC and the CFC issue. So the company is going to make an entity classification election to have that investment vehicle be pass-through partnership, right? So the first option, they were looking in Luxembourg. So Luxembourg SA, SAs are very popular throughout the world. You see them in a lot of countries. So the SAs are generally by default treated as a foreign corporation, right? But in certain circumstances, depending on the country, SAs are going to be per se corporations. So Luxembourg SAs are one of those types of entities. So if you look at the list in 8832, if you look at the Treasury regs, you'll find that a Luxembourg SA is a per se corporation. You cannot change its tax classification. So this is a problem, right? Because if they use a Luxembourg SA, they could still certainly use it, but they're not going to be able to make a partnership election for that entity so that its U.S. investors can get true pass-through treatment of the income, right? They don't want a PFIC. They don't want to worry about CFC issues. They want a pass-through partnership tax treatment. They will not be able to get it if they use a Luxembourg SA as that investment vehicle. So what do? Well, they go elsewhere, right? So alternatively, you can use Bermuda, you could use Jersey, Guernsey, the Cayman Islands. There's a lot of different jurisdictions out there that will allow you to set up entities where you can make these elections. So instead, they say, okay, we're going to go with the Bermuda LTD. It's a limited company by shares. It's a corporation. So it provides all the liability protection we want, low tax jurisdiction, right? It's checking off all the boxes. But more importantly, that Bermuda limited company, it is not a per se corporation. It is a foreign eligible entity. We can file an 8832 to elect partnership tax pass-through treatment. And that's what we're after, right? And so now we have the U.S. investors in there. It's a partnership investment, a foreign partnership investment. So they're going to get K1s that show the allocation of their passive earnings. And this is what they're after. They don't want PFICs. They don't want CFC issues. So this is why per se corporation planning is really important, because what I've seen done a lot is companies will set up an entity from inception without really considering these rules. And then down the road, they hear that, oh, well, maybe we should check the box to make it a disregarded entity. Maybe we should check the box to make it a partnership. And then we look at the structure and we find out, well, you set up the wrong entity. You've got a company here that you cannot make those elections for. So it's got to be treated as a corporation. Nothing around that. So I hope that was helpful, provided some guidance on what we mean by per se corporations. Again, a quick list is always in the 8832 instructions. So if you Google search IRS Form 8832, within the instructions, they have a list of all the entity types and in what country you'll find those entities that have to be corporations. And then again, if you're looking for the federal law, the authoritative support is in the Treasury regs. So again, right here, the 301 7701-2B8I has the full list. Okay, so that covers it for this video. I hope that was helpful. If you want some guidance on additional entity classification elections, I'll put some links below, or this will be added to a playlist that has some more kind of tutorials and guidance around those types of issues. So thank you again for watching, and I look forward to seeing you again on the next video. Thank you and take care.